Uh, well, good noon, dear learners. Today I'll discuss the topic for the students of our BCom program, and the topic is adjustments which have to be taken into considerations while preparing the financial statements. Well, friends, this topic is particularly meant for the students doing a BCom program from Indira Gandhi National Open University, MBA program from Indira Gandhi National Open University, and MCA program, and the course code is MCS-35 for MCA students, and for MBA student it is MS-04, and for the BCom students the course code is ECO-2. So this topic is gaining a lot of importance these days when we talk about cutthroat competition in the present business environment. We have to prepare the financial statements well in time, because it is only the financial statements which provide the information about the profitability and the financial position of a particular business concern. Therefore, the readiness of the financial statement at the end of the year is must. So sometimes what happens, dear friends, that by knowingly or unknowingly there are few items which are left while preparing the financial statements. So until or unless we consider those items which are unknowingly left out, the profitability position and the financial position of that particular business concern will not reflect a true and fair picture of that particular business enterprise. But at the same time, we have to prepare the financial statement without any delay. Well, friends, the items which are left out unknowingly, so how those items need to be treated while preparing the financial statements, this we will discuss in today's lecture. So, well, friends, as I have discussed in my previous lectures about the accounting concepts and principles for the BCom and MCS-035, that is for MCA students, there is accrual concept. So as per the accrual concepts, any expenses or income which have been incurred or earned during the year must be recorded while preparing the financial statements, whether the expenses incurred for that particular year have been paid or not. As per the accrual concept, if the expenses have been incurred, irrespective of the amount paid or not, will be recorded, and likewise any income which have been earned during a particular year, whether it is received or not, must also be recorded while preparing the financial statements. So let me discuss these adjustments one by one. So, well, friends, say for example, if a firm closes its books of accounts on 31st March 2020, say for example, if the rent for the month of March 2020 is not paid, but we have already taken the services of a particular unit, and the rent for the month of March 2020 has not been paid so far. So here very simple, because we have already taken the services, it means the expenses have been incurred of the year 2019 and 20. It means the year starting from 1st of April 2019 and comes to an end on 31st March 2020. So if during this particular year, if any expenses which have been incurred but not paid during this particular year must be recorded in the books of the accounts, because for this particular year the rent for the month of March has not been paid. So does not make any difference whether the amount has been paid or not, but we have taken the services, therefore it is our duty, it is our obligation to make the payment of the rent to the owner of that property which we are using it. Well friends, likewise the insurance premium. Well friends, say for example, if we have paid the insurance premium for a period of 12 months. Say for example, our financial year is starting from 1st of April 2019 and comes to an end on 31st March 2020. And for this particular financial year, we have made the payment of insurance premium, say for example on 1st October 2019. Say for example, we have made the payment of insurance premium of rupees 24,000 for the complete year. It means from 1st of October to 31st of September next year, for this period of 12 months, we have made the payment of insurance premium of rupees 24,000. Now here I request my learners to pay very serious attention to this transaction, that the payment has been made on 1st of October. It means our financial year starts on 1st of April, May, June, July, August, September. It means when we are making the payment on 1st of October, so from 1st October to 31st March 2020, so this period of 6 months belong to the current year, and the next 6 months belongs to the next year. So it does not make any difference whether the amount has been paid during this particular year. The entire amount of rupees 24,000 has been paid during this particular year, because here this 24,000 have been paid for the complete year, and for this 6 months belongs to the current financial year and 6 months belongs to the next financial year. So here the insurance premium of rupees 12,000, that is for this particular year, must be treated as an expenditure, and the amount which we have paid for the next year, so this amount is known as prepaid expenses. It means expenses of the next year but paid during this particular year are known as prepaid expenses. So this is what I want to convey to my learners, that any expenses that belongs to the current financial year, whether paid or not, must be recorded while preparing the financial statements of a particular business concern. Then goods sold but amount has not been received. If during the particular year, if you have sold the goods, say for example rupees 20,000, and our current financial year is starting from 1st of April 2019 and comes to an end on 31st March 2020. So if the payment has not been realized up to 31st March 2020, does not make any difference. Since the sales have been made, therefore this amount of rupees 20,000 must be recorded as a revenue for the current financial year as per the accrual concept. Then the next one is advance received against goods to be sold during next year. Well friends, say for example our current financial year is 1st April 2019 to 31st March 2020. So if you receive any amount as an advance during the current financial year for any transaction which has to be recorded during next year, or any transaction which has to be taken place in the next year, so that amount cannot be recorded during the current financial year. Say for example, if the sales has to be made during the next current year, but on account of sales which will take place in the next year, if you receive any amount as an advance during the current financial year, cannot be recorded during the current year because the sales has not actually taken place during the current year. So the sales will take place in the next year. So therefore the sales revenue must be recorded only during the next current year, not in the present financial year. And the advance which you have received during the current financial year for any sales which has to be made in the next year must be recorded in the financial statement as an advance, and it must be recorded in the liability side of the balance sheet. Well friends, now we'll start the adjustments which are very important to be taken into consideration while preparing the financial statements. Well friends, first of all we discuss about the closing stock. Well friends, when the amount of closing stock is given in adjustments, see, when the trial balance has already been prepared and now you are in the process of making the financial statements, so at that very juncture, if any item which was left out unknowingly and now if you come across about those items, so their treatment is must in order to prepare the financial statements. Otherwise the financial statements will not reflect a true and fair picture of the business enterprise. So the first adjustment regarding the closing stock is when closing stock is given in the adjustments. So generally amount of closing stock is given in the adjustments. So well friends, the amount which remain unsold at the end of the financial year is generally known as closing stock. So this amount of closing stock is recorded in the credit side of trading account. See what happens that when we talks about financial statements, final accounts, it means trading profit and loss account and balance sheet. So in trading account, generally the items which are related to the goods purchased or goods sold are recorded, and in addition to this, any direct expenses will also be recorded in the debit side of profit and loss account. Now the question arises, what are the direct expenses and what are the indirect expenses. So friends, this concept which we have already discussed in the previous lectures, but just for the sake of understanding of my learners, I just repeat it about the direct expenses. So these are the expenses which can easily be traced to the cost of the products are called direct expenses. Say for examples, if you are making the payment of wages to the workers who are directly involved in the productions of goods and services, so you can easily trace the cost of this wages to the cost of the product. And if the plant is running with the help of, say for example, petrol, diesel, etc., so the amount which we are spending on petrol or diesel, that is also a direct expenses. So any expenses which can easily be traced to the cost of the product is called direct expenses. On the other hand, say for example, if you are making the payment to the gatekeeper or to the receptionist, so this amount which you are paying cannot easily be traceable to the cost of the product. Or if you are making the payment of salaries to the staff persons who are working in the office, cannot be traced to the cost of the product. Therefore, any expenses which can easily be traced to the cost of the products are called direct expenses. So, well friends, the amount of closing stock which is given in the adjustment will be shown in the credit side of trading account, and it will also be shown in the asset side of the balance sheet while preparing the financial statements. Well friends, as I have already mentioned that any item which is given outside the trial balance will have a double impact on the preparation of the financial statements, as per the dual concept, that any items which is left out and which has not been considered up to the process of preparing a trial balance will have at least its impact at two different stages. Here, when the amount of closing stock is given in the trial balance. So, well friends, it means that when the amount of purchases has been given in the trial balance as adjusted purchases, it means the amount of opening stock and closing stocks both have been taken into considerations while calculating the amount of adjusted purchase. And now the question arises, how can we calculate the amount of adjusted purchases? So amount of adjusted purchase can easily be calculated like opening stock plus net purchases minus closing stock. So when the amount of closing stock and opening stocks have been already adjusted in the purchases, in such a situation you will never find the amount of opening stock in the trial balance, because the amount of opening stock and closing stocks both have been adjusted while taking into consideration the amount of adjusted purchase. So therefore, you will find only two things in the trial balance. The first one is adjusted purchase and the second one is closing stock. So adjusted purchase will be recorded in the debit side of trading account and the closing stock would be recorded in the asset side of the balance sheet. So the students must be very particular about treating the amount of closing stock if it is given in the trial balance. So when it is given in the trial balance, so the closing stock will only be shown in the asset side of the balance sheet, because of the reason that the amount of closing stock has already been adjusted while calculating the amount of purchase, and that has already been shown in the debit side of trading account. Then the second one is outstanding expenses. So here outstanding expenses are those expenses which have been incurred during the current accounting year but have not been paid. Well friends, outstanding expenses, the services you have already taken during the current financial year but the payment has not been made till the end of the current financial year. So if the amount of outstanding expenses is given in the adjustment. So well friends, again my sincere request to all of you is that any item which is given in the adjustment will find minimum 2 places while preparing the financial statements. It means it will have its impact at least at 2 different places while preparing the financial statements. Now you see this transaction, outstanding expenses, say for example rent. So as I have already made you very clear, as per the accrual concept, it does not make any difference whether the amount has been paid or not. If that particular expenses belongs to the current financial year, it must be recorded in the current year while preparing the financial statements. So first impact of this adjustment is that amount of outstanding expenses must be added to that concerned expenses, and it must be recorded either in the debit side of trading account or in the debit side of profit and loss account, the first impact. And the second impact is that while preparing the balance sheet at the end of the year, since services have already been taken but the payment has not been made, therefore this amount will stand as liability for the enterprise until or unless the payment is made. So therefore this amount of outstanding expenses must also be recorded in the liability side of the balance sheet under the head current liabilities. So well friends, I have already told you about the concept of current liabilities, that any liabilities which have to be paid within 1 year are called current liabilities. So if amount of outstanding expenses is given in the trial balance, so here we are treating the adjustments from both the perspective, that when the amount of outstanding expenses is given outside the trial balance, that is in the adjustment, then how will it be treated, and when the amount of outstanding expenses is given in the trial balance, then how this transaction will be treated in the books of the account. Now the second aspect is when outstanding expenses are given in the trial balance. So well friends, when any item which is given in the trial balance will have its impact only at one place while preparing the financial statements. So when the amount of outstanding expenses are given in the trial balance, then such amount of outstanding expenses will only be recorded in the liabilities side of the balance sheet under the head current liabilities. So make it very clear that when it is given in the trial balance, then it will find its place only in the liability side of the balance sheet under the head current liabilities. But when it is given in the trial balance, then the amount of outstanding expenses will be added to the concerned expenses, and the total amount will be shown in the debit side of either trading account or profit and loss account. Then the next one is prepaid expenses. So well friends, we can call it expenses paid in advance. Say for example, if any expenses which belongs to the next year and you make the payment of such expenses during the current financial year is known as prepaid expenses or expenses paid in advance. Now the question arises, how to treat such item while preparing the financial statements? Well friends, this is as just to the reverse to the outstanding expenses. So when the amount of prepaid expenses is given outside the trial balance, that is if it is given in the adjustment, then first of all it will be subtracted from the concerned expenses, and after the subtraction of the amount of prepaid expenses from the concerned expenses, the net amount will either be recorded in the debit side of trading account or in the debit side of profit and loss account, because the direct expenses are always shown in the debit side of trading account and indirect expenses are always shown in the debit side of profit and loss account. So if any expenses which belongs to the direct expenses, it means it must be subtracted from the concerned direct expenses and the net amount should be recorded in the debit side of trading account. And if this expenses is of indirect in nature, then the amount of prepaid expenses must be subtracted from the amount from the concerned expenses and the net amount must be recorded in the debit side of profit and loss account. So this is one impact. Then the second one is it will have its impact on the balance sheet also. So this is prepaid expenses or expenses paid in advance, that the amount which you have paid in advance, any amount which belongs to the next year, but you make the payment of such expenses in the current year. So therefore it becomes an asset for the organization, for the enterprise. Therefore such amount of prepaid expenses or expenses paid in advance must be recorded in the asset side of the balance sheet under the head current assets. So this is first part, that when the amount of prepaid expenses are given outside the trial balance. Now the question arises, when the amount of prepaid expenses is given in the trial balance. So well friends, when the expenses paid in advance or prepaid expenses are given in the trial balance, it means the adjustment entry has already been made while posting the transactions into ledger, then balancing them, and then finally posting the balances in the debit side of trial balance, debit or credit side of the trial balance. So therefore the impact of such transaction will have only at one place. So if the prepaid expenses are given in the trial balance, then the prepaid expenses will only be recorded in the asset side of the balance sheet. Then such expenses cannot be subtracted from the concerned expenses as the adjustment has already been made during the year. Therefore it will have its place only at one place while preparing the financial statements. Then the next one is accrued income. So accrued income is earned during the year, but the payment has not been received till the end of the year. So this is what we call accrued income, any income which has been earned during the current financial year but has not been received till the end of the financial year is known as accrued income. So well friends, when accrued income is there, so such income must be recorded in the credit side of profit and loss account and in the asset side of the balance sheet while preparing the financial statements. But when the amount of accrued income is given outside the inside the trial balance. So when the amount of accrued income is given in the trial balance, it means that adjustment has already taken place while posting the transactions from journal to ledger, making a balance, and then finally posting these balances in the debit and credit side of the trial balance. So when it is given in the trial balance, then the amount of accrued income will only be recorded in the asset side of the balance sheet. Then the amount of accrued income cannot be shown in the credit side of profit and loss account. Yes, if the amount of accrued income is given outside the trial balance, then as I have already mentioned that it will be recorded minimum at two places. The first one is, this is the income which we have earned. So therefore any income which we have earned, whether the payment has been received or not, will be recorded in the credit side of the profit and loss account. Since it is not received till the end of the year, therefore it becomes an asset for the organization, and while preparing the balance sheet it will also be recorded in the asset side of the balance sheet under the head current asset. Then the next one is income received in advance or unearned income. Well friends, this we have already discussed, that any income which we have not earned and received in advance. As just in the beginning of the lecture I discussed with you that if any amount of sales which will take place in the next year, but for that amount of sales which is to be taken in the next year, if you receive any advance against that sale which has to be taken in the next year, is called income received in advance. Income received in advance or unearned income, because the sales will actually take place in the next year. So therefore when the sales will actually be taken, only in that case the revenue can be realized. So here the income received in advance. So income received in advance, if it is given in the adjustments, so such income must be subtracted from the concerned income and it must be recorded in the liability side of the balance sheet. Say for example, if rent you have received in advance, you received the amount of rent in the current financial year, but this amount of rent does not belong to the current financial year because it belongs to the next financial year. Therefore this amount of rent which you have received in the current financial year as advance must be subtracted from the rent which is given in the trial balance. So while preparing the profit and loss account, so the amount of rent which you are receiving on account of letting the property out is your income. So it must be recorded in the credit side of profit and loss account, and because this amount you have received in advance, this amount of rent you have not earned during the current financial year, therefore this income does not belong to the current financial year, therefore it must be subtracted from the amount of rent which is given in the trial balance. So after subtracting the advance, the net amount of rent must be shown in the credit side of profit and loss account, and then because this income does not belong to the current financial year and you have received in advance, so this amount will also be shown in the liabilities side of the balance sheet. But when the amount of this item received in advance is given in the trial balance. So when such item is given in the trial balance, so I have already told you friends that it will have its impact only at one place. Therefore, it cannot be adjusted in the amount of rent which is already shown in the trial balance. Therefore, it will have its impact only in the liability side of the balance sheet. It will be recorded only in the liability side of the balance sheet under the head current liabilities. Then the next one is depreciation. Well friends, this is very important from the examination point of view. So student must pay little more attention on this adjustment depreciation. So when we charge depreciation on fixed assets, so depreciation is nothing but it is the allocation of the cost of fixed assets over its expected useful life, because at the end of the expected useful life of the assets we have to replace these assets with a new one. Therefore, it is the allocation of the cost of the fixed assets over its expected useful life. So well friends, when we charge the amount of depreciation on the asset, now the question arises that here there are two methods of recording the depreciation. The first method is when depreciation account is charged to the asset account. It means when provision for depreciation account is not maintained. It means the amount of depreciation is directly charged to the asset. So in such cases, we generally make an entry depreciation account debit to asset. That concerned asset, say for example, if the fixed asset is machine, so the depreciation which we are likely to charge on machine, the journal entry will be depreciation account debit to machine, because the depreciation is an expense for the business and any expenses or losses as per the rationale of the nominal accounts are debited. Therefore, the amount of depreciation will be debited and the asset is an asset for the business and as per the rationale of the real account, because under real account the assets of the enterprises comes under the real account. So therefore, as per the rationale of the real account, debit what comes in and credit what goes out. So here, by charging the amount of depreciation on the fixed assets, the value of the fixed assets gets decreased. Therefore, the account of the fixed asset, that is machine, must be credited. Therefore, the journal entry would be depreciation account debit to asset. Now, for the sake of understanding, I would like to make it very clear to my learners, since depreciation is a nominal account and the balance of nominal accounts are always transferred to the profit and loss account. So in order to close the account of depreciation, we need to charge the amount of depreciation from profit and loss account. So the next journal entry would be profit and loss account debit to depreciation. So these are the two transactions while recording the amount of depreciation as per the first method. It means when the provision for depreciation account is not maintained. It means when the amount of depreciation is charged to the asset. So here the treatment of this transaction would be that if friends the amount of depreciation is given outside the trial balance, so the amount of depreciation would be recorded in the debit side of profit and loss account, or the amount of depreciation will also be subtracted from that particular concerned assets while showing it in the asset side of the balance sheet. Say for example, machinery has been shown against rupees 2 lakh in the trial balance, and in the adjustment it is given that depreciation has to be charged at the rate of 10%. So 10% of rupees 2 lakh, that comes 20,000 rupees. So the amount of rupees 20,000 will be charged as depreciation in the debit side of profit and loss account, and while preparing the balance sheet in the asset side, machine account would be shown against rupees 1,80,000 because the book value of the asset is rupees 2 lakh as it is given in the trial balance, less amount of depreciation, that is 20,000. So net amount rupees 1,80,000 would be recorded in the asset side of the balance sheet. This is as per the first method. Now the second method, when the amount of depreciation is charged against making a provision for depreciation on that particular concerned assets. So here in this case, instead of charging the amount of depreciation directly to the asset, the amount of depreciation is charged to the provision for depreciation account or accumulated depreciation account. So here in this case, the journal entry would be depreciation account debit to provision for depreciation. Since the depreciation is an expense, and as per the rationale of the nominal account, depreciation, any balance of the nominal account will be transferred to the profit and loss account. So therefore, in order to close the account of depreciation, we will transfer it to the profit and loss account. So the second entry would be profit and loss account debit to depreciation. So here the difference between the first and second method is that as per the first method, the asset is directly charged to the depreciation. It means the amount of depreciation is charged to the debit side of profit and loss account, and the same amount of depreciation is deducted from the concerned assets while recording it in the asset side of the balance sheet. But as per the second method, when depreciation is not charged to the assets, it means when the depreciation is charged to the provision for depreciation account. So under this method, the amount of depreciation is charged to the debit side of profit and loss account, and in the balance sheet you will record the concerned assets as against its original cost. But at the same time, in the liability side of the balance sheet, again you need to show the balance of the provision for depreciation account. Say for example, in balance sheet, in the trial balance, you have given the machine against rupees 2 lakh, and in the adjustment it is given that the depreciation has to be charged at the rate of 10% on machine. Now you have been instructed that you have to charge the amount of depreciation on machine as per the second method. It means the method where the provision for depreciation account is maintained. So here 10% of rupees 2 lakh, that is 20,000 rupees, will be charged from the profit and loss account. In that will be charged in the debit side of profit and loss account, and in the balance sheet you will record the machine against its original cost. That is, in the asset side of the balance sheet, the machine will be recorded against rupees 2 lakh, and in the liability side of the balance sheet you will record provision for depreciations rupees 20,000. It means during the expected useful life of that particular assets, you will keep on accumulating the amount of depreciation in order to replace the old assets with a new one. So the amount of accumulated depreciation will be equal to the amount of the original cost of that particular assets, and after the expected useful life of the assets, it will provide you the funds, adequate funds, in order to replace the old assets with a new one. So well friend, this was all about the adjustments to be taken into considerations while preparing the financial statements. Then the next one is next adjustment is bad debts. Well friends, you might be well aware about the bad debts. So this bad debts is the amount which could not be recovered from the debtors. So when during the year, in order to enhance your profit, when you extended the credit facilities to your customer and when you made the sales on credit basis, so any amount of bad debts is loss for the enterprise, and any loss or expenses as per the rationale of the nominal accounts are recorded, are debited, and the balance of nominal accounts are always transferred to the profit and loss account. So the adjustment of the bad debts would be, say for example, if the bad debts is given in the trial balance. So bad debts is an loss for the enterprise. So any loss or expenses has a debit balance. So the amount of bad debts would be recorded in the debit side of profit and loss account. And while preparing the balance sheet, the amount of bad debts, if it is given outside the trial balance, then this amount will further be deducted from the amount of debtor, because the amount of bad debts which is given in the adjustment, it means when it is given outside the trial balance, it means the adjustment entry has not been made till the end of the accounting year. Therefore, it will have its place minimum at two different places while preparing the financial statement. So first it will be recorded in the debit side of profit and loss account, and then it will be subtracted from the amounts of debtor, and the net amount of debtors will be recorded in the asset side of the balance sheet. Well friends, with the help of an example, I would like to make it very clear, because the adjustment of bad debts, provision for bad and doubtful debts, and then provision for discount on debtor, these adjustments are very important, and generally I see that the students gets confused while treating the items which are related either to the bad debts or provision for bad and doubtful debts or provision for discount on debtor. So with the help of the example, we'll study how bad debts, provision for bad and doubtful debts, and provision for discount on debtors are treated while preparing the financial statements of a business enterprise. Well friends, trial balance is given. Trial balance debit side, credit side. Bad debtors given, debtors 1 lakh, bad debts it is given 2000 rupees, bad debts 2000. Adjustments, the first adjustment it is given that write off rupees 1000, write off rupees 1000 as further bad debts, further bad debts. rupees 1000. This is the informations which are given. So now you see how this item will be treated while preparing the financial statements. So very clear. The first one is profit and loss account. So here bad debts given 2000 plus further bad debts 1000, total 3000 rupees. So this amount of rupees 3000 would be recorded in the debit side of profit and loss account, as rupees 2000 bad debts during the year rupees 2000 were bad debts, and after preparing the trial balance you came to know that the further amounts of rupees 1000 have been bad debts. So total bad debts rupees 3000 will be recorded in the debit side of profit and loss account. And while preparing the balance sheet, in the balance sheet, asset side, assets. So here debtors are rupees 1 lakh, less further bad debts 1000 rupees. So as I have already made my learners very clear that any amount which is given outside the trial balance, it means when any adjustments is given outside the trial balance, so this item will have find its place minimum at two different places. So here the further bad debts was added to the amount of bad debts and was recorded in the debit side of profit and loss account, and this amount of further bad debts will also be deducted from the debtor while preparing the balance sheet. Further bad debts 99,000. So rupees 99,000 will be recorded in the asset side of the balance sheet. Then the next one is bad debts recovered. Sometimes what happened, dear learners, that bad debts which you had already charged from profit and loss account, but later on the customer comes to you and requests you that, okay, well friends, I am sorry that last year I could not make the payment, but this year my financial position is sound enough and I want to make the payment of my debt. So that is what we call bad debts recovered. It means any amount which was previously charged as bad debts and was debited to the debit side of profit and loss account, now later on it recovers. So when the amount of bad debts recovered, so generally we make the entry cash account debit to bad debts recovered. The first entry is cash account debit to bad debts recovered. And the second one is, since bad debts recovered is your income, so as per the rationale of the nominal accounts, any expenses, losses or income are transferred to the profit and loss account. So second one is bad debts recovered account debit, bad debts recovered account debit to profit and loss accounts. So this is the income for us. This is the income for us. So, well friends, when there is any income which is received during the current financial year will be recorded in the profit, in the credit side of profit and loss account. So, its impact on its will be bad debts recovered, in the credit side of profit and loss account rupees 1000, say for example 1000. Then the next one is provision for doubtful debts. See, provision for doubtful debts. So, well friends, when we extend the credit facilities to our customers, so there are always a chances of converting the credit facilities into the bad debts. Sometimes the amount of bad debts may be less, sometimes the amount of bad debts may be more. So, now the question arises, how to treat the amount of provision for bad and doubtful debts while preparing the financial statements. So, here the informations are given. Debtors you have given, debtors rupees 4,10,000, 4,10,000. Provision for doubtful debts 20,000 rupees. 20,000. Bad debts 6,000 rupees. Adjustments you have been given, that further bad debts 10,000 rupees. Further bad debts 10,000 rupees. And second one is second adjustment is maintain provision for doubtful debts at the rate 10% on debtors. So, here the treatment of provision for bad and doubtful debts would be, first of all, profit and loss account, profit and loss account, profit and loss account. So, here the bad debts bad debts 6,000 rupees. Here I would like to make a very sincere request to my learners that while charging the amount of provision for bad and doubtful debts, I would like to give a very good equation to my learners, that while calculating the amount which is to be recorded in the debit side of profit and loss account, if they follow that particular equation, they will never commit a mistake. The equation is bad debts plus further bad debts plus new provision minus old provision. If they follow this equation, that is bad debts which is given in the trial balance plus further bad debts which is given in the adjustments plus new provision we have to maintain minus old provision. So, old provision is given in the trial balance. So, how you see that this transaction will be recorded while preparing the financial statements. So, bad debts is 6,000 plus further bad debts are rupees 10,000 plus new provision. So, new provision we have to maintain at the rate of 10%. So, here one